Hey, hey, hey! It's the first ever real estate marathon. I'm your host, Jas Takhar. For everybody who's watching right now, this is none other than Mr. Phil Soper. He's the president and CEO of Canada's
Good to see y'all.
Largest real estate company, 22,000 realtors. Did I get that right, Phil?
Well, 20, but you know, when you add
the staff,
we can never forget our administrative staff and our management across the country. So we're probably about 23,000 people in the family.
In fact, I think they're actually more important than the realtors right off the bat, because the realtors are not going to be able to do what they need to do.
They would certainly agree with you on that one, Jas. Yeah, right.
I'm sure they would. The reason I wanted to bring you in, Phil, and thank you so much for joining us.
My pleasure.
We got a real estate marathon. We're going from, we started at 9 a.m.
It is so cool. And you love this.
I love this.
You just love it.
I love this. What do you think about our virtual arena? You are our first
You are doing
live
really,
guest.
really well. It's but you never do anything small, do you?
Thank you.
Yeah.
Thank you.
What a team.
So I wanted to talk about kind of the national real estate market.
Yeah.
I had a good friend of yours, Mr. Chris Slidham, on. We spoke about GTA, but I want to get your take on GTA, but I think we'll end at the GTA. I just got off of Zoom with Mr. Michael Saracini, president and co-founder of Keyspire, which is one of the largest investment groups in the world, helping people invest into real estate. And now I thought that it'd be very timely to jump around to the other cities in the country, because we have guys and gals that are watching all over the world. Most of our viewers right now are from Canada, but they're from Vancouver, Calgary, Halifax, Montreal. We'll end it off in the GTA because both of us live here.
Exactly.
And we call this place home, in the hood. I love it. Why don't we start off with kind of, like, did you want to go national first or go into the cities? Maybe we can go into Vancouver first, our friends in the West.
Yeah. You know what? If you look at how the developed world has bounced back from the lockdown, because even though Europe was a bit ahead of us, Australasia was a bit ahead of us, really it was a spring phenomenon, right? And we went into lockdown and we had this unprecedented time, and it would kind of blow me away when the media would say, "Oh, and we haven't seen this kind of a drop in the real estate industry or the economy in half a century or whatever." I say, "Yeah, we turned it off." We were told,
shut it off.
Right, we were told in the real estate industry, like many industries, to shut things down, to go home, to shelter at home, and to allow the country to heal. And it worked, right? It really worked well in Canada. Bit of a mess south of the border, but that's another whole story.
That's a whole new marathon, actually, probably, exactly, Phil. We might have 12 hours on that alone.
But we've got to remember, coming into this thing, Canadian real estate, and I'd say North American real estate, was on a tear. We didn't have a particularly strong 2018 and the first part of 19 because of regulatory intervention. And we were paying the price for an overly exuberant market in the middle of the last decade. That sort of 14 to 17 time frame, prices got out of hand, and federal lawmakers decided to impose a stricter restriction allowing people access to mortgages, so that the mortgage availability hurdle, B20, really slowed markets, particularly in the GTA and Vancouver, which were the most overheated markets. But we were coming out of it strong, middle of 19. Now, you guys didn't really slow down. But
we haven't slowed down for the last 13 years, for sure.
You don't read the papers.
I don't read the papers. I get my information from you.
Yeah, well, there you go.
Chris, Michael, and the rest of our speakers.
Never read the papers. Just do the best you can do.
I try my best to shut out the negative news as much as possible. But continue.
Anyway, overall, we were on a roll in the first quarter. Volumes were up everywhere in the country. We don't really usually see that. You wanted one of the biggest national stories of all, or themes of all time, is that Canada is so big, it is actually a nation of independent real estate regions. So what happens in British Columbia is very different than happened on the prairies, different than Ontario. It's different in Quebec, and it's different in Atlantic Canada. But we were all pulling ahead at one. For the first time in a long time in the first quarter, and boom, we were told to shut down the industry, and we did. We released our forecast at the end of the first quarter, and I'm happy that it unfolded the way we predicted, because at the time we took some shots to the broadside. People saying, how can you say this? You know, what we said basically was that the market would suffer in the second quarter, but that the need for housing, because remember, we've had a housing shortage in this country for a number of years now. The need for housing wouldn't magically evaporate because people sheltered at home during this crisis. And that pent-up demand and the incredible stimulus of record low interest rates would cause a spike in the weeks after the lockdown. And we weren't gazing into a crystal ball. What we were doing is looking at history. We studied the financial crisis, 2008, 2009 in particular in Canada. We saw what happened then, and we looked at other recessions. We said, you know, stimulus will, if the fundamentals are there, if the demographic drivers of housing demand in this country are there, there'll be a lot of people looking for housing, and more because of low interest rates. And that's exactly what happened. So we had forecast a 4% national rise in home prices.
Was that for the quarter?
For the year.
For the year. Got it.
For the year. Yeah. With a dip during the lockdown. And then a comeback. The surge has been greater than we expected. Right. And well,
it's better to sway on the side of conservative.
We got the direction right.
Which was
that there would be more demand for houses for homes than we had supply, and that very low cost of money would put upward pressure on prices. I will say, just to call it out again, because you know it's important that we don't let this happen again. The National Housing Agency, CMHC, came out about the same time suggesting home prices were going to fall by something like 20%, 18%. We thought it was irresponsible at the time.
Chris, sorry, Phil, I want to ask you, why do you think they did that? Like,
I think
that's quite bullish to say that much. I see a 2%, 3% decrease. Okay, Phil, but
it was, we believe, we have no idea, because no other credible forecaster, the major banks, Bank of Canada, our analysis pointed to anything near this. So it was such an outlier. I think they probably used standard models. And they plugged in drop in rise in unemployment, drop in GDP, drop in, retail sales, as if it was driven by the economy and not a request to go stay at home and shut down the economy temporarily for a couple of months. But the problem is they've stuck to it. They haven't gone back and done the analysis. And they're getting farther and farther. They're off by, their forecast is off by close to 30% now. And it's irresponsible. Because there are people that take CMHC credibly, even though this cry wolf time has got less and less of them taking it seriously. There are people who say, well, if CMHC says it's a Crown Corp, like CBC, Canada Post, it must be true. And so maybe they were ready and they were capable of getting into the market, and now home prices are that much higher, and that they've lost that much ground. So I find it irresponsible. It's not just that it was wrong. It was that they realized they were wrong and they stuck to it.
And they haven't come back and reanalyzed and come out with other new articles. And
I apologize. We got off on a
tangent. That's okay. I think it was very important, because what happened is, and a lot of people that are watching and listening right now saw that exact report. And we had it emailed to us, and they said, well, I'm not going to look at investing. CMHC, the organization as big as it is and how much pull it has, is saying that this is going to be the decrease in values, right?
Well, and it's fascinating, they are an insurance company. And they compete against private sector insurance companies like Genworth and Canada Guarantee. And they have lost tremendous market share during the crisis because they abandoned whole sections of the market. First-time home buyers without credit histories essentially abandoned them. And the private sector stepped in, took that share, and the banks with these higher service levels in the private sector have given them more business overall.
Right.
And there was this strange, bizarre letter that the head of the outgoing, he's leaving in a few months, but the outgoing head of the agency sent to the heads of banks saying, we've got to protect ourselves from the industry. He called it the banking, the mortgage industry, the dark underbelly. It was just bizarre language. And the bank said, sorry, we're getting great service from the private sector. And, we're being very careful with our underwriting, the people we provide mortgages to. We are absolutely confident that they will live up to their obligations under their mortgages. Strict boring criteria. Remember, the stress test is still in place.
Yeah.
Right.
Well, there's been a little tweaks, but nothing big. Yeah.
Right. Well, it's a unique tool that Canada has and other nations have found very interesting. And we have, coming into this, we had the lowest mortgage default rate in the developed world.
Do you know off the top of your head what that was? Because I always
0.24 of 1%.
Yeah, I was always says like it's somebody's on average it's like somebody's forearm and hand. Like where in the States it's like 4 out of 10 or something.
Well, you know what? It's 11 times higher than it was in Canada coming into this. So we could have a doubling, which the Bank of Canada said we could double, which is still less than 1%.
Yes,
defaults on mortgages across the country, even if we doubled. And we'd still be very low by international standards. So it's a tightly managed, excellent housing system, financial system, mortgage insurance, real estate brokerage, our game. It's a well-tuned machine in Canada that adapts to crises and comes back to serve Canadians. Because as we talked about earlier, there's so much demand for housing in this country.
Well, the world needs more Canada. I've been saying it. And they're going to hear a lot more, right? The world definitely does need more Canada. I want to go, as this is a marathon, I want to run to a couple of cities.
Yes, of course.
Okay. Let's go to Calgary. Vancouver we'll touch on as well, but Vancouver is very similar to GTA in terms of stats. Let's go to Edmonton and Calgary. Let's go to Alberta. Let's talk a little bit about what's happening there.
The big challenge in Alberta and to a slightly lesser extent in Saskatchewan, but to a very similar extent in Newfoundland, is in late 2014, oil prices lost 70% of their value. Oversupply really was the culprit. Big producers of conventional oil around the world were flooding the markets, try to fuel their growth, and the U.S. Fracking or enhanced recovery business was really firing all cylinders, and prices plummeted, and it really hurt the economies of our oil producing countries. They've recovered somewhat, but of course, in the early stage of the pandemic, they went at one point, and people don't really get this, and we don't have time to get into it, but they actually went negative, where you had to pay suppliers of oil to take it off their hands because the pipelines are full of oil. They're moving oil.
They're storing it.
They're saying we have nowhere to sell it. So producers actually pay just briefly. We're actually literally talking days. Then they bounce back, and they have bounced back some. The big advantage that Alberta, Calgary, Edmonton have is they have become so affordable. Yeah. So if you go back to the middle of the 2000s, Calgary was the second most expensive city in country. It was Vancouver, Calgary, Toronto. And now, of the major cities, it's the most affordable. And if you look at the Economist's Economic Intelligence Unit ranking of the best cities in the world, the most livable cities, we've got 3 in the top 10, tied with Australia for the best in the world. Sadly, no American city in the top 25 anymore. Lots of reasons for that: safety and security, unrest. But the Calgary leapt ahead of Toronto and Vancouver and is now the top Canadian city by livability because of affordability. Mm-hmm. The cost of living is so good there, and it will come back. It's a young province, our youngest province in Canada by average age, highly educated, and they're just going through a difficult stage. It's lasted longer than we'd like, but Royal LePage is doing great in Alberta, and our people are happy and engaged, and they've got the bounce back just like we've seen in British Columbia and Ontario and Quebec. You
mentioned British Columbia. Let's talk about British Columbia.
It got hit a little harder by the mortgage stress test than Toronto did. It's about 50% more expensive. So you take the GTA and you look home for home, neighborhood for neighborhood, about 50% more expensive, which is massively more expensive.
That's 50%. Significant.
You take a $2 million luxury home in Toronto, it's $3 million home.
Exactly.
And so it's twitchier. It's smaller and a smaller city, quite a bit smaller, a big city in Canadian terms, but in a smaller market, it's twitchier. And of course, all the unrest in China has caused some challenges for that. It was never a huge part of the market, always less than 10% transactionally, typically less than 5%, but really important on the margin, right? On the growth margin, the Chinese investment market. And so that had to settle. But everything, it's not quite as hot as the GTA, but it's definitely pointed in that direction. Double-digit volume changes year over year in July.
Well, it's been getting a lot of press right now in the real estate market. The city is Montreal. I'm not a fan of their hockey team, but that's me.
Go Habs. Go Flames. Go Canucks.
Shout out to everybody watching across Canada. We appreciate each and every. What spurred this on in Montreal, in your thoughts?
It was the previous government that got their fiscal act together. They became the best managed provincial government in the country, the only provincial government to run surpluses, which is kind of shocking because Quebec has traditionally been the basket case of Confederation when it comes to fiscal. They got their unemployment rate down to the level it was when that first Parti Québécois government of René Lévesque was put in place. I think it was like 44 years ago. They finally got it down to there, and then they kept going. So, and the government changed, but the new government has carried on those policies. It is a well-managed, diverse economy, big population, much more affordable, kind of on par to Calgary, although prices in Montreal have exceeded those in Calgary because we've been seeing 5 to 10% price increases. So Montreal, demand here, supply here, price up, upward pressure.
Fundamentals, right? Where there's more people coming in, there's not enough supply, prices are going to go up, which really brings me to the GTA now. Something that we've been seeing for a very long time here. But it's that 17% increase last month that I kind of want to touch on. What do you think brought that on?
Well, there may be no economic region in the world that is more desirable, has more potential than the Golden Horseshoe, Southern Ontario.
When you say potential, Phil, elaborate on that for me, because some would say, like you go downtown Toronto, there's no place to build anymore. I know there's applications for buildings to be built on top of buildings. Like we see that happening. They're not approved yet, but that's happening. But when you say potential, I just want to get your headspace around that.
So if you start at Canada, the Trump administration has made Canada the most desired place to invest and to immigrate to for immigrants with potential, with assets, with capital, with skills. And we were already on a tear. So things have just brand Canada just keeps growing and growing and growing. And coming out of this pandemic, the way Canada managed the pandemic versus the United States, it will do nothing but improve our state in the world. And of course, they have had a war on immigration, and we have said to the best and brightest of those relocating on around the globe, you're welcome here. You are part of the vitality of our nation.
Right.
And there's a short-term pause during the pandemic, but remember, only about 15% of new Canadians buy their first property. Mm-hmm. So it's typically around 3 years that they really get rolling, and by 7 years, new Canadians own more homes than people who were born here. About 72% of new Canadians own homes. So there's tremendous demand from our organically or from our young people. There's demand from new Canadians. We have a diverse economy in Southern Ontario, very, very diverse and desirable place to live in the world. A long and prosperous future for those
fundamentals are very
invest
strong
in real estate in this part of Canada and the world.
And that's one of the my favorite reasons why I love the Greater Toronto Area, because the fundamentals are strong, but it's not like there's so many factors that play in. I mean, I was speaking about it earlier with Chris, and one thing we didn't even mention was just the tech sector. Yeah. Like it's outpacing Silicon Valley, right? And so it's again, more people in, not enough supply. Only one thing will happen with values, they go up. But as investors, that's how we can win, and that's what we want to take advantage of.
Absolutely. It's the future is bright.
Mr. Phil Soper, thank you so much. We've
done
this so many times, and every single time I learn something new, and I know our viewers and our watchers do, the marathoners now do as well. Thank you for being so gracious with your time today.
Well,
I really appreciate
my pleasure, and keep tuned in. I know you've got great speakers.
Well, we got. Thank you for that segue. Thank you very much.